Martha Reeves and the Vandellas. Listen to it. So it's Wednesday, July 24th, 2024. Jason Shapiro Crowded Market Report. So today was a fun day, huh? We finally had an S&P that went down over 2% on the day. Whoop, whoop. I think it's probably within 3 weeks of me saying that I didn't think that that was going to happen the rest of this year until election day. So right on time, almost, makes sense. But NASDAQ, was down over 3%. And the Russell and the Dow was down over 400 points. And the Russell, which was actually trying to show strength much of the day, finally gave it up in the second half of the day. So, Tesla earnings were bad or whatever. Google earnings weren't that great. But truthfully, we know that this whole thing kind of changed. The tone of the market kind of changed. Some would argue on CPI day. I would argue on the day that Taiwan Semi came out with better earnings and the market failed. But either way, the tone has changed and is not so positive. Now, we've had some earnings come out after market today, and they all look pretty good, and the stocks look like they're reacting well. So maybe tomorrow's another day. But as of right now, the tone is clearly not good. And the main issue is that not only did stocks get rocked, but bonds got rocked. The 2 years were sort of flat on the day, but every other, there's your 5-year, there's your 10-year, and there's your 30-year. The curve steepened pretty dramatically. Long end got crushed. And so you couldn't hide in bonds, right? And you couldn't hide in gold because gold failed miserably today too. After being up early, totally kind of collapsed into the close. Silver, the same. And copper, which has just been a horrible asset. You're talking about 1, 2, 3, 4, 5, 6, 7, 8, 9 straight down days in copper. I would say 2 up days in the last 14 trading days. And you're talking about something that's gone from 520 to 408. Right? 520, 408. So you're talking about something that's down 21% in 2 months. Could you imagine if the S&P was down 21% in 2 months? What will be going on? Well, this one is. So you couldn't hide there, and you couldn't even hide in the dollar, because the dollar really did nothing today. It was down a lot more earlier in the day, came back a little, mostly by the close, but still closed down. We get down stocks, down bonds, down dollars, not something you see a lot. And I have talked in the past, I don't necessarily think this is it, but I've talked in the past that if you want to play the end of the world trade, right? Oh, the debt and the this and the that, and America losing its this and printing too much money and all that. That's the first thing you got to look for. Now, I don't think that was it today. I'm more interested if that happens on a day when they actually cut rates and create liquidity, or print money to create liquidity and then see stocks, bonds, and the dollar down. That, I think, is the death knell. We got to get there first. But on that same note, I have spoken in the past about how I thought the idea of the Fed cutting rates, if the S&Ps and the stock market and gold and everything was on all-time highs, was insane. And that if you wanted the Fed to cut rates so badly, then what you need to hope for, all these assets to go down. Let the S&P go down 15%. And then we can talk about Fed cutting rates. I'm not sure you don't want that so much, but that's really what's going to get there. And I keep feeling like that's maybe what's where we're headed. I don't know what the number is, but with so many people believing that the first rate cut is the thing to sell, the market probably goes down into the first rate cut. And ironically, the quicker that happens, arguably the quicker the rate cut comes, right? I mean, at this rate, we might get one at the next meeting. I don't know. But that's kind of how I feel about that. But there really literally was nowhere to run today, and nowhere to hide. The only thing that went up really was the yen, and the Swiss. And those are the two ultimate kind of risk-off assets that there are. Well, the VIX went up. And actually, strangely enough, energy went up as well. But, you know, those are the risk-off assets, the yen and the Swiss. And that's went up today. So today was a classic risk-off day. The tone clearly is not very good. Let's see if it can rebound tomorrow on the back of some of these good earnings and on the back of some what looks to be initially good reaction by these companies that had these good earnings. Let's see if it holds. But tone not good. I think we've done enough damage at this point as well that, you know, this thing ain't just coming right back and taking out highs, right? It's going to take a while. I, again, have the belief that we probably hit lows on first rate cut day and then go up until election day. But, you know, predicting the future is kind of silly. That's just my guess here, but let's see how things progress as these things happen and see how the ideas adjust. Okay. So those are my thoughts today on another fun day out there in the global financial markets. Oh, and by the way, some of these charts, I don't have it here, but like the Nikkei chart is unbelievably bad here. Some of these charts are just really bad here. The Euro stocks not looking very good either. The DAX not looking very good. So it's all kind of happening together. Anyway, that's really it. We'll keep an eye out for how positioning is adjusting as this is going on. Are they buying the dip or are they panic selling the dip? Let's see. Only the data will tell. But in the meantime, it's a time to be gathering your shekels and looking for opportunities, not really being too aggressive here. That's what I think. All right. So thank you. Check us out, crowdedmarketreport.com. Check out our Substack. Please like the video if you like it. Tell your friends and family. And we will talk to you again soon. Thank you. Have a good day.